What's up, everybody? This is Jimmy with Trading Decoded. It is August 13th, 2024. I'm still under the weather, so I'm going to try and get through this video pretty quickly. First and foremost, all signs were up today. We had some pullbacks. We didn't know it was going to be an uptrending chart all day long, but once we realized that it was better to stop considering puts, which didn't take long to find out, we stopped suggesting puts. In fact, I spent more time today trying to keep people from doing that than anything else. Now, today's chart started out pretty amazing, and then it turned into what I would consider to be crap. And we'll go over the later part of the chart today, but you'll also see why I believe time in the market is risk, right? And we'll see why, because we see this happen all the time. But let's go ahead and launch chart, see what we got going on here. Pre-market was very happy. Everything in the top 10 was green early in pre-market, but we had gapped up from yesterday's after hours to this morning's open. We filled that gap. Then we started to have a nice trend to the upside. Now, we waited until after the reports to draw our pre-market lines. And as you could see, we kind of fell out of those levels. Now, PPI came out lower than expected. The market was happy about that. Again, the top 10 was green. Our call line was a close above 536.74. Our put line was a breach below 536.08. In this put scenario, we were targeting at least the pink line, maybe even the teal line, because that's where the move, every time it got below that line, was terminating. To the upside, the reason we wanted to wait for a candle close, if you're being more conservative, is that the next resistance up is all the way up here at this yellow line. Now, I know you're saying, but Jimmy, what is this orange dotted line? This is a 50% retracement level, okay? The actual resistance on the day was blue line, and the next resistance up from a previous trading day was the yellow line. We look for the halfway point in moves that are larger than $1 apart. Now, this isn't a dollar apart, but I was explaining to people what we do to fill that gap. And it oftentimes acts as a level of resistance, just like it tried to do here, and it turned into support. But for the call scenario, our entry was getting above this white line, getting up to the yellow line. The reason we were interested in calls right off the bat was because, well, the market was extremely happy. The news that came out was good, and we were trending up. I mean, all the things. And everything we'd want to see in the normal part of the trading day was happening, and all we had to make sure was that the Qs were not burdened by resistance. So they had just gotten out of their pre-market range, told everybody they're sitting on pre-market support. The Q's next level of resistance is that orange line as well. It was a pretty big distance. We also had the 50% retracement level in there. And so what we were aiming for was either SPY or Q's to hit this line first. That was the plan. Okay. ADD, on the other hand, did open very green, but started to print red. So that was a little nerve-wracking at first. But for everybody who took this position, many of which took this and only this trade today, we got in because we breached our call line. We got out because we reached our profit target. Simple. Okay. That there was a 36.5% win. Beautiful trade. We hit that level. We pulled back. We couldn't get back to where we came from, so higher lows, par for the course with an upward trending day. If you want to buy calls off of higher lows, that's fine. But the other thing you have to recognize is that we also put in a lower high. So for me, I wasn't suggesting calls there because we're putting in lower highs. I don't like to buy put calls during times of lower highs. When we switch back into calls, and I'm not suggesting puts either. In fact, the very first thing I said is, guys, the market's too green. We need to break several support levels to the downside before I would consider puts. And otherwise, let's just wait to see what happens with this mini wedge. If it breaks down, we'll start to consider when we would be more likely to win on puts. Until then, just be patient. We broke that little downtrend. The wedge broke high. You don't want to jump in simply because we broke this trend. Why not? Because your resistance proven on the day is not far enough away to make any money. However, if you want to play the break of the next line or a close above that line, your next resistance is much farther away. There's room to make money there. This is what you got to look for. Now, As we were struggling, double top here at resistance, Qs in an area of double resistance up here. The one thing we're looking for, wait, what was this happening? 10,952. I didn't put my arrows here. So we recognized the Qs were struggling. We said to everybody, guys, if Qs could get below this orange line up here, which it created a little bit of support at, and SPY can get below this line of support, I'd be looking for SPY to run back down to the orange line. Just like it found support here, it's the next support down from here. If you took that trade, it was a quick trade and you could get out. Furthermore, we had lower highs, back down to support. Lower highs, back down to support. Lower highs, back down to support. At some point, you've got to expect support to fail, not hold. But you will notice no white arrows here. Why? Because that orange line was formidable. It was a very strong level of support. Yes, the odds say that the support is going to fail if we keep putting in lower highs, and it did. But today was a call day, guys. There were so many things in the market that were green, so many reasons to find calls instead of puts. We never even came close to getting through our pre-market range, let alone our put line. There was no reason to play puts today. Now, Jimmy, if you won't buy puts, when would you buy calls? Well, let's make sure that we take out the most recent lower high first, right here. Let's make sure we have higher lows going in, right here. So criteria number 1 is met here. Criteria number 2 is crossed here. Well, why didn't you enter there? Because you have that small little problem of resistance being just right here. Okay, so when do you take the calls? Well, you could be aggressive and take it when we close above that resistance, but just know where your next resistance is. In this case, it was right here at this double top. Okay, so if you wanted to play from yellow line, take the risk of getting up to that. You have to consider these lower highs on the way down as potential profit targets on the way back up. We don't know if it's going to hold support or resistance or not. You don't know, you'll never know. But if you wait for a candle close above that, the next resistance is all the way up here at the yellow line, i.e. the opportunity to get into this trade with room to move. We got that. So whether you got in here and played that whole thing up line to line or got in here and played it up to the next line, you made money. Okay. Now, from there, you're not going to see many trade opportunities. Why? Because the rest of the day was crap. The moves were too slow. It was a grinder of a day to the upside. Now, when we got these nice moves to the upside, I was at lunchtime. When I came back from lunch, we were trending sideways. Now, here is where time in the market becomes a problem for me, especially late in the day. This is especially why I don't trade after 12 o'clock. If you were in calls here, okay, or holding calls here. And by the way, this was a massive move to the upside. This was a gap that SPY had from a couple days ago that needed to get filled. So from line to line, and yes, the 50% level kind of held as resistance. And then we got through it, and right up to fill that gap is where it went. Okay. Beautiful move to the upside there. But again, I wasn't here for that, so I couldn't suggest anything. I come back, we're trading sideways, putting in lower highs, so I wouldn't be interested in calls. Doesn't mean to buy puts. However, if you're in calls, guys, this late in the day, these drops like this and like this and like that and like that and like that are catastrophic for profits on same-day expirations. Catastrophic. If you were in calls even from down here, and you held all the way through here and you didn't take profits and you held through all this, yes, theta was working against you a bit, but this move right here took away a chunk of what profit you may have had. This took it all away. And the crazy part is, and the unfortunate part is that by the time you got back up to this line, you probably weren't back in profit or break even again yet. A move this late in the day, this big, going against you is horrible. Now, if you held that trade and stayed in all the way to the close, you probably got out with okay profit. But man, getting caught up in these big red candles when you're in calls late in the day that come out of nowhere, you can't anticipate these. You cannot anticipate these. So all we could do is say, hey, man, when you get to a level of resistance, especially one that we're struggling to get through, just take your money. things start to stack against you the later in the day we go. Whether it's time, whether it's theta, whether it's, news. I mean, spending more time in the market is not beneficial in times of uncertainty, in my opinion. Okay? Now, I scare myself out of tons of trades, right? I leave a bunch of money on the table every day. But I'm okay with that because I'm comfortable at when I get in and when I get out of my trades. Okay, I took 2 trades today. The second one was a put, not off this, but during the time the Qs were stuck in this area here. And I knew I wanted to get in this area. I wanted to get out when the Qs made it down here. Like an idiot, I didn't take myself out when we hit it the first time or the second time. We didn't get a third time until much later. Now, I didn't get out there either. I stopped out of this trade for much less profit, having got in up here and got out here because I chose to try and hold for the orange line instead of the actual support level. So that trade there was only a 17% win versus what could have been a 30% win. But that's just me. I only took it because I was up after my first trade and I said, why not? Wasn't looking for puts today. Wasn't looking for the market to dump today. In fact, like I told you guys in the beginning of this video, most of the day was spent trying to keep people from playing puts, except for this one. There's situational times where things look ripe for puts, even in an uptrending day. We try and find those because we have people that are more comfortable playing puts than they are calls. We got counter trend traders in our group. We got all kinds of people that want to know how to spot all kinds of trades. Okay? So with all that said, I got nothing else for you guys. I'm trying to make this short. It's only about a 12-minute video at this point. So I hope you found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, well, we'd love to have you. There's links down below. It's completely free for the first week. I'd appreciate it if you come in, give us a try. And if you learn something, awesome. If you like what you get, become a paying member. If you don't, thanks for stopping by. But I also want to point out that support and resistance absolutely works as targets, and knowing where, if you're in calls or puts, where the move is likely to start encountering some sort of problems for you, right? You might start to encounter problems in calls at any of these lines. And every single time we hit these lines, we struggle a little bit to get through them, okay? Doesn't mean you play puts there. I'm just saying they're good opportunities to consider putting in trailing stops or taking profits when we get to them. All right. Thank you guys for watching. Till tomorrow. I love you. See you.